Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax, the deciding factor. Investors are watching closely for new developments after recent bank failures have opened up risk for greater market contagion. Last Friday, Silicon Valley Bank was taken over by federal regulators after a run on customer deposits led to the bank's collapse. SVB, previously the 16th largest bank in the world, was the largest bank in the U.S. for providing venture capital to tech startups, an industry segment which recently has experienced downturns and major job losses. Without fresh rounds of new venture capital, many tech firms turned to their invested assets to pay off debts and wages. Too many customers withdrawing their monetary deposits required SVB to sell investments at a loss to cover their cash shortfall, ultimately leading to the bank's insolvency and closure. The U.S. Federal Reserve and U.S. policymakers will need to take additional steps to prevent single bank failures from becoming a systematic issue. On Wednesday, banks requested a record amount of emergency funding from the Federal Reserve. According to Reuters, banks took an all-time high of $152.9 billion in liquidity funding from the Fed discount window, surpassing the previous 2008 record of $112 billion. Silicon Valley Bank's failure has weakened overall investor confidence, rattling equity and commodity markets. The Dow and S&P stock index both finished the week slightly higher, up 1 to 2% after posting new lows earlier week. The Bloomberg Commodity Index, however, continued to drag lower, now down 5% over the past 2 weeks as energy losses outweigh gains from precious metals. Gold pushed to its highest price in 12 months as investors flocked to the trade in a classic hedge against recession fears. Meanwhile, crude oil futures fell nearly 13% to make the biggest single-week decline since the downtrend started last June. Now trading at the lowest prices since late 2021, the WTI futures strip found support along long-run trend lines. In live cattle, with the exception of December, most 2023 futures contracts declined by more than $2 per hundredweight, likely feeling some risk effect from the market contagion fears, but more so just reflecting the seasonal market pattern. In the cash, moderate to active fed cattle trade took place in the north at mostly 164 live and 264 dressed, mostly $1 lower than last week. In the south, moderate volumes were noted at 164, which is also $1 lower. Thanks for watching. Remember to visit CattleFax.com to become a member to see the latest market news and analysis.